All right, so Katie, we're going to look at the charts. Let's start off with the S&P chart. You say we've lost short-term momentum, and the S&P, after a series of higher lows, has kind of reversed that trend. Show us or tell us what we're seeing right here on the charts.
Well, it's just an intraday reversal at this point. So very, very short-term loss of momentum. Not terribly meaningful for our indicators as of yet, but we do have as of last Friday, a counter trend signal to suggest that the up move is overdone. I don't think that should be terribly surprising after 23% upside. So just yesterday, we moved from a short-term bullish bias to a short-term neutral bias to accommodate that signal. And we're starting to see it in risk assets more broadly. And of course, we're all looking at Bitcoin this morning as it reaches new highs. Bitcoin should share that same signal that we have in the S&P 500 as of tomorrow or the next day. So we do feel that the move is overdone. And what that means for people is that they may want to take down some exposure to the higher beta areas of the market and or simply wait to add exposure.
All right. You say it's just an intraday reversal of that momentum, but you say your long-term bias is also a bit bearish. So what indicators are you seeing that's making you more bearish in the long term?
Yeah, we have to always reconcile these timeframes, especially when volatility is so elevated. And on the monthly chart of the S&P 500, we have very distinct deterioration in our indicators. And that came even before the big corrective phase into the April low. We saw long-term momentum start to fall off, and it is still actually to the downside despite the magnitude of the relief rally. So we have an overbought downturn there that the market needs to contend with, and we have a loss of momentum that we really haven't seen since the beginning of 2022. So we do feel that this is something we want to sell into the strength and wait for that major low to develop, that major cyclical low.
All right, so sell into it, but you say you also want to maintain long-term core positions, especially if they lean defensive. What are you talking about? What sectors or what areas are you talking about there?
Well, it's not practical for most of us to reduce our equity exposure entirely, of course. So for that core long exposure, ideally those stocks have positive momentum, intermediate term, long term, and ideally also they tend to have defensive properties. On the sector front, it's pretty obvious. It tends to be consumer staples and real estate, utilities, selected areas within healthcare. So we would be more comfortable holding those areas of the market at this time, but then also sourcing other asset classes for diversification.
You also have a hedge for us. It's actually in the metal space. It's not gold. We've seen gold kind of move to the upside this week during the volatility. It's another metal. Give us a sense. How would you play this hedge for investors, and why this hedge?
Well, we all know that precious metals tend to be diversification, right? And in our scans, we came across platinum this week, and I'm sure we're not the only ones. It was running up very, very sharply. But importantly on the chart, if you take a step back and kind of zoom out on platinum, it appears to be breaking out from a very long-term, a multi-year triangle formation. And in our work, we find the triangles to be very high probability, meaning that they tend to see follow through once you get that breakout. The breakout can come to the upside or downside. Of course, this is to the upside for platinum with this rally. So we're intrigued by the catalyst that presents from a technical perspective, especially at a time when gold has taken pause within its uptrend. We're still very comfortable with gold exposure, and gold has been one of the few remaining long-term uptrends globally on the global macro front. But platinum may emerge here as an upside leader within precious metals.